Okay, ready to go, Bill. First of all, I just wanted to make a brief introduction of LatamIB. LatamIB is investment banking boutique focusing M&A and capital raising transaction in the Americas. Today, we are pleased to host Bill Casey. Bill spent about 40 years with EY, the auditing and consulting firm. He has the chance to live in Latin America, in Brazil for 5 years, correct, Bill? Then he moved back to the US, where he led the expansion of EY in the region. Before retiring, he was vice chair and board member of the strategy and transaction business for EY. We consider very relevant his experience, not only because he participated in numerous transactions in the region, advising strategic multinational private equities and family offices to invest in the region, but also because his operational experience of leading the expansion of EY in Latin America in the region. So, Bill, happy to have you. Thank you for joining. Could you please expand and make your own introduction? I'm sure that I missed a couple of key points.
No, well, thank you for that introduction, Alessio. And I'm thrilled, and I certainly appreciate the opportunity to work with both you and Roberto once again. I've worked with LatamIB many times over the years. Many of my colleagues throughout Latin America have worked with LatamIB, both Alessio and Roberto, successfully in many transactions. So it's just great to have this opportunity to chat with you as well as the audience today. It's a great time to be talking about this topic. I look forward to our dialogue, and I think it's very timely given the events that are going on, and look forward to our discussion. Alessio?
Yes. Sorry. So we will be answering some questions at the end, if you don't mind. Could you please include them in the chat whenever you're ready? And I think we can start with some of the questions that we have for you, Bill. Roberto, do you mind starting with our first question?
Yes. Do you want to enable the camera? Oh, this is great. Bill, based on your extensive experience in the region and across Latin America, where you've been, through various economic and political cycles, which really is very important, this long-term perspective, what is your current view about the situation in the region and the opportunities for international and regional investors?
Well, I would say, first of all, I'm very bullish on the region right now, and why? If you look at and again, it's always difficult to look at Latin America as one region. A lot of different pieces here, but I would say in aggregate, Latin America, Central America, some really great, exciting opportunities for investors, both international investors as well as local investors. I mean, there's a lot of activity going on, but I would say certain parts of the regions, whether we're talking about Mexico, we're talking about Brazil, we're talking about some of the countries in Central America, some of the smaller Andean companies, there's opportunities throughout there. And, I think what's very important, for some folks that are perhaps not as familiar with investing in Latin America, it is a very different region now than it was in the 80s, in the 90s, and quite frankly, the early 2000s. When we had shocks back in these periods, when we had the first shock that hit late 80s, early 90s, hit the Mexican economy really hard. And why was that? US interest rates popped up. The central banks throughout Latin America weren't prepared for it. So just like that, the currencies devalued, very quickly. It took a while for the central banks to respond to that in these countries. And it almost took a decade for a lot of these countries to unwind that. That's changed now. You see in Central America, most of these countries are responding to changes in the environment, increasing their interest rates before you see that in the Federal Reserve. So you have new policies, you have much strengthened central banks than we had all those years ago. That's a big difference. Number two, these countries have diversified their risks. In the 80s and 90s, there wasn't a lot of foreign investment in a lot of these countries, other than a handful of the big multinational, international companies back in that time. Now it's different. Most of these countries have a much more diversified portfolio of investors. It's not just local. It's from the US, it's from Europe, it's from Asia. So they diversified that as well. And a lot of these countries are trading outside of their borders. And so when you put all that together, and then you look at the performance of Latin America post-COVID, it's a standout. Not every country has performed as well as others. But if you look at the Mexican economy, the big economies, the Mexican economy, the Brazilian economy, some of the countries in Central America, Costa Rica, to name one, they've outperformed the US. So, it's a good opportunity. And I would say, likewise, we're seeing this in the deal market itself. Always a good sign when you see local activity is greater than the international activity. Haven't seen that in a while.
Yeah. No, you make a couple of very interesting points. And one of them, one of the reasons that we thought very appropriate to invite you is that you are optimistic. You have spent most of your career with the EY, and you have been exposed to the ups and downs for more than 25 years in Latin America, in the region. And one of the key questions is that, what is your perspective? Where are the current opportunities? Because of course, people are a little bit nervous. I would say, Bill, I don't know if you agree, but mostly locals compared to international, that they have a more long-term and a broad vision on the region. But where do you see the opportunities in terms of for the international and also for the regional investor? Because the whole point, as you mentioned before, is the diversification. International investor look at the region because of the growth potential, opportunities, demographics, all of that. But also, I think people in the region, this has been a wake-up call to continue their regional expansion. People with in a specific country, they are, especially family companies, they have been exposed to the economics of that country. But the idea to continue expanding in the region or in the US. So what is your view? What is your perspective, again, on where can be the opportunities in terms of, I don't know if you wanted to start talking about some, you mentioned already some countries or either some sectors or diversification in other parts outside of the region.
So let me tell you why I would say, from my perspective, why I'm bullish. So I'm still, very, very active, with my team that is working within the region. I still have lots of former clients that are investing in the region, and we're busy. Our teams in Latin America, if I look at all of EY's activity throughout the globe, what are the teams that are the busiest right now? They're in Latin America. Well, and so there is a tremendous amount of deal activity. And the part, again, I'll make this point again, that's interesting is that it's local activity. And now we're starting to see the cross-border activity increasing. Now, normally, I would say we would see the other way. It was 70% inbound, 30% local activity. It's flipped now. Most of the activity is local. And what's driving that? And what's driving that right now is lower valuations. That is always kind of the impetus, and the pressures for growth. And so the industries that seem to be doing particularly well throughout the industry, and I can get more specific on countries, it's agriculture. I meant infrastructure. Infrastructure continues to be, a very exciting area. A lot of privatizations of infrastructure. You also have a lot of, particularly cross-border investment in infrastructure, because that space globally has become more interesting. We're seeing a lot of interest in, of course, consumer products, because the point that you made, the demographics are compelling for consumer products companies. We're seeing it in retail, and of course, healthcare. Healthcare it's been a need in the region for 40 years that I was dealing with it. So we're seeing a lot of opportunities there. But I think, when I look at countries, the big countries, Brazil, Mexico, particularly Brazil, the valuations are low. And that's driving just a lot of activity within the region. And I think, again, if as investors look at their portfolio right now, how do you not look at Latin America? And particularly look at Brazil. Brazil's the 10th largest economy on the planet. It's going to be the 8th largest economy in the next couple of years. If you want to be in Latin America, you want to have access to this market, you've got to have, you got to be at a minimum, you got to be in Mexico, you got to be in Brazil. And right now, and I know we're going to talk about nearshoring opportunities, lots of great opportunities, particularly in Mexico, for the obvious geographic advantages of that, but then throughout the region, that's going to drive it as well. And the other area that I think it's driving a lot of this is if you look at the U.S., a lot of businesses, what was the number one impediment to growth for a lot of businesses in the U.S.? Labor, talent, the access to labor and talent. And the fact that you have all of this talent in Latin America, that through an acquisition, you can acquire that. That's interesting too. And I'll make one last point, is the other side of this is we're seeing a lot of activity. And when you talk about family businesses, now is the time to prepare yourself, if you're on the potential seller side, for a transaction. And so we're seeing our teams are seeing a lot of activity where business owners are either preparing to sell the entire business or selling pieces of the business. I mean, here in the US, throughout Latin America, throughout Europe, there's a lot of money that's still waiting in private equity to be invested. So I would say, this is a great opportunity right now to get those assets ready so that, you can facilitate a good sales process and preserve the value.
I will add a comment, and also I will include a follow-up question. You mentioned by mistake agribusiness, but certainly it's very active as well. We at LatamIB, we have been working, and what is happening is that with the logistic issues and also the nearshoring that you already mentioned briefly, U.S. required to have sourcing from more friendly geographies. So that's another sector that we have found.
300%. And I wanted to emphasize infrastructure and agriculture came out first. And I would say particularly for the points that you're making around supply chain, and obviously as a result of the Ukrainian war, and the challenges that created the food supply, we are seeing a ton of deals in the agricultural space throughout the region, I'd say in particular Brazil.
Yeah. And then my follow-up question is on, have you experienced or have you identified some activity also between Latin American groups coming into the US? Because we have received several indication of interest, because in their diversification strategy, of course, US is critical. And I wanted to get your thought about, if you have any comment on why it would make sense for Latin American group start considering expanding in the US at this point. If you can, please.
Again, the best play for really any investor is really, it's around growth, it's around diversification, it's about de-risking the business. I mean, Latin American businesses, investors are really compelled to do that. And I would think particularly if you're on the corporate side, in terms of enhancing your brand, getting into the US market, is always going to be a wise move, because I think there's just a tremendous amount of synergy in terms of doing that. And look, there is, you and Roberto have done so much work in this area, helping Latin companies invest in the US, and they've been incredibly successful. And I will tell you, for someone who spent 25 years of my career living and working in Latin America, the challenges of doing business in Latin America cannot be compared to what we go through in the US. And I wish I had written all this stuff down back then. But what's deemed a crisis in this country, is barely routine, in Latin America. And I think, the experiences that folks have here in Latin America, bringing that to the U.S. I think they will be wildly successful, and it's the creativity that I've always experienced with folks in Latin America to solve these problems and not panic, which for my fellow brethren, U.S. folks, not panicking, but being able to be creative, problem solve, team environment. So I would say, look, there are great opportunities, here in the U.S. I get the exchange rate, differences. I hear you. However, one needs to look at the size of the market. It's growing. And then again, I get back to the fact here is that to the extent that you can leverage the advantages that you have in Latin America, which is the accessibility to talent that we don't have here. If that is something that you can exploit, I think you'll be very effective, a Latin investor in the U.S.
Great, yeah, very good points. Thank you very much.
Bill, as you were mentioning, nearshoring, I guess there's been a series of articles being published, in the Economist, Financial Times, Wall Street Journal, etc., regarding, how companies are focusing here. And they normally say Mexico is the biggest potential beneficiary, lots of FDI headed due to the proximity to the US. However, these articles usually they don't tend to focus much on other countries with free trade agreements, like in Central America, Dominican Republic, Colombia, and the like, which could also benefit companies seeking for opportunities. What can you tell us about these other markets?
It is fascinating because I've ridden the whole ride of the pendulum on this one. I certainly remember all the investments that went into Central America, particularly focused on the textile industry and then some light assembly and manufacturing. So there's a lot of muscle memory in using nearshoring within Central America and lots of countries throughout Latin America. But I think when COVID hit, we certainly spent a lot of time with our clients working on trying to de-risk their supply chain and the over-reliance that they had on Asia. And when you think about whether you're concerned about the political environment in Asia, you're concerned about just the logistics and the timeframes associated with getting material from Asia all the way to the U.S., whether it's on boats and planes and whatever. Companies overcorrected. They went 100%. And any large corporation in the U.S., this is not acceptable at the board level. The boards are not going to accept that. There's so much, obviously concern around this is that, Latin America as part of your supply chain equation is something that, companies are really going to do. And that is not just as it relates to goods, but it's also related to a lot of services. A lot of European, U.S. companies, they outsource a lot of their back office, whether it's information technology support, computer tech support, whatever the term is, to India or the Philippines. Well, okay, that's great, but you have time differences, some language issues. A lot of times, firms would do that 100%. We started seeing during COVID that was shifting because Latin America, you have the same time zone. And again, as every year that ticks by, you have a greater percentage of the population, that speaks English. So I think the opportunities, it may not be 100% that's going to be nearshore in Latin America, but I guarantee you the right answer is not going to be zero. So, there is going to be plays, and it's not just going to be the traditional stuff that we always saw going to Mexico. A lot of the maquiladoras on the border towns that would do, some of the assembly, the light assembly for car parts, these sorts of things. I think it's going to be much broader. And I would think for companies that are based in Latin America to think about, what in their manufacturing process could they be part of that solution in terms of nearshoring. So I think it's going to be, the obvious ones that were done 20, 30 years ago, 40 years ago. Yeah, they're going to come back, but I think now it's going to be broader. It's going to go into services. Think about healthcare. You're sending it to doctors that are based in India to look at your X-rays for your bones. You could do that in Latin America. So I think companies need to think more broadly about that, because I think there's going to be a lot of opportunity there.
Yeah, certainly. We have seen, I think, activity also of BPOs or outsourcing in Latin America, trying to expand here to provide services more affordable costs. And as you said, I mean, there is a relevant bilingual population in the region, and there are significant difference, the cost, of course, but also the time different. And even if you need to provide some training in person, you know, it's easier to connect or to travel to the region compared to Asia. I may have a last question before we jump into the Q&A session. Yeah, we still have a couple of minutes. You mentioned, of course, the relevance of Brazil and Mexico because of the size of their economies and opportunities for any regional international investor. What other countries at this time, because of course there are some volatility, you see that can be of interest or attract foreigners or either investor from the region? I mean, other than Brazil and Mexico that you already talked about briefly.
We still see a lot of continued interest and expansion, and I'll talk about the Andean region first, into Colombia in particular. I think if you look historically at Colombia's performance, I'm talking going back 40, 50 years, I think Colombia is the only country that's never had a max deval of the currency. So the stability of the Colombian market is very, very attractive to particularly folks in the U.S. Not only that, but just the logistics of getting into the countries has enhanced significantly. So we see a lot of opportunity there. I would say the Colombian economy has performed reasonably well post-COVID. It's not let's say at the same pace perhaps as Mexico and Brazil, but if you look at just the sophistication, the diversification, of that economy, the size of the economy, close to 40 million people, I think, that's a market that, I would say a lot of our investors are very, very interested in, because a lot of the businesses that they do see in Colombia are not just Colombian. The market is broader than Colombia. They do see flows outside of Colombia to some of the other regions. Costa Rica continues to be an interest, particularly from an outsourcing perspective. Lots of services there. I would say Costa Rica in terms of their education system, where I believe it's required to take English at school, or the courses are taught in English. So you have that the education system there seems to be a good advantage for them. That has been reasonably compelling. So that continued investment, we certainly have seen. We've seen there. So I would say if I had to pick two countries that that are good opportunities, I think those are, and both of those are really gateways into those regions. Costa Rica is a gateway into Central America. I mean, you think about it, and that region is huge. You add up all the size of Central America. I mean, you're up to 100 million people, and you throw in big countries like Guatemala and Honduras and et cetera. I mean, it's a big market, and I think countries look. Some of our investors, when they look at those regions in particular, they look at a gateway country like Costa Rica, because folks that tend to operate businesses within Central America more broadly are typically based in Costa Rica. Likewise in Colombia, they tend to be based in Colombia, and they have operations in Ecuador, involve operations in Peru. They might have something going on in Venezuela, not a lot, but so I think those two countries are interesting because of not only the stability of their economies, but also the roles that they play within those respective regions.
Yeah, we have seen it as an advisor. We have seen also more activity coming from Peru, and I think things are also coming back in Chile, which has been always a very developed and important economy for the region. I think we can start with the Q&A. We have a couple of questions here. Roberto, you have one? Yeah.
Yeah, I think we have one. This is related to Peru. I mean, we have Juan Yoshikai asking about political instability in the region. I mean, he wanted us to elaborate a little bit on your perspective on this issue. And he was mentioning that Peru had been growing consistently and investors were very bullish. And the current, political environment, I guess, has caused a little bit more of a deceleration in the country. And he feels, that companies are struggling, or he seems to sense a more pessimistic outlook at the moment. What's your thoughts?
Yeah, I would say, obviously the political situation. I think historically people in the U.S. would have said, well, gee, the politics in Latin America tend to be, very volatile. They switch from left to right, back to left, back to right, and now most countries have switched back to left. They were right, probably 5 years ago. However, if you look at the political situation in Europe and the U.S., they're both considerably more volatile than they were 5 years ago. So, all of this, it's, you have to kind of put it in perspective. And I would say, look, the long-term view here favors the fact that, you're going to have in the short term, you're going to have volatility for sure. But we have volatility back home here in the U.S. as well. So I think, my sense is obviously, the changes in the governments that have been somewhat highly volatile in the last year or two in Peru. The good news is if you look at, for example, what happened in Chile, these things tend to, ultimately work themselves out in the relative short term. So I would say certainly folks that I'm talking to that have long histories of investing in the region. And when you look at countries that have recently had some volatility, Chile and Peru, they're not holding back. They're taking a long-term view because, again, they look at, in terms of this question, Peru's had a really nice story to talk about over the last 20 years. And to back away from that because of the volatility that they've had during the last 2 years, I think you're going to miss an opportunity if you have that view.
I have a political question. I hope you are able to answer.
For Roberto or for me?
What is your view regarding the U.S. policy and relation with the region? So I hope we don't get into trouble.
This is so great to be retired now because I no longer have to give I can give the Bill Casey, for what it's worth, standpoint. I would say on a personal level, for having spent so much of my career down in Latin America, both living there and working there, and working with all the professionals like Roberto and Alessio that have informed me about doing business in these respective countries, is that, look, for my chair, making a decision right now to put money in Asia versus Latin America, that is a no-brainer. I've been disappointed that the U.S. has focused so much of their attention over the last 20 years on Asia when they've got all these great opportunities in their backyard. And, it's going to be one of these things where, the U.S. is going to come around to it. Finally, they're starting to focus on it again. And I certainly hope politically that, recognizing the great relationships that the U.S. has invested nothing in, and it's really been one-sided with the Latin countries down there, that, the U.S. will just remember all the great friends, all the great relationships that the U.S. has had for the last 200 plus years, in Latin America. So, I am hopeful now that, I think a lot of people have gotten burned when they've invested, outside of Latin America and some of these other BRIC countries, and they've walked away, 100% walked away from, these investments. Whereas, you look at Latin America, look, I get it. The political volatility, that's fine. But you know what? Here in the U.S., we've got political volatility as well. The world's changed, and it's impacted the U.S. as well. I mean, get over it. But you think about, again, the proximity of it, the I would say just in terms of, we have two big oceans, that isolate the Americas in total, that are helpful for future conflicts. I'm very hopeful that for the balance of this century, that we're going to see, hopefully, a better integration, not only economically within Latin America, but we also have a much better integration in terms of, whether it's politically, trade agreements, logistics, and maybe as part of the border situation that's going on right now, where the U.S. is going to start having immigration hubs throughout Latin America. That's hopefully that'll help. But again, I'm again very, very hopeful, because I'm just thinking, and again, I'm hopeful. Why? I'm based on just historic experience of what has happened in some of these other regions. Lessons learned.
Yeah, no, I fully agree, and I hope that will happen and make all the economic sense. So we have some question pending. Unfortunately, we ran out of time, so we probably try to address them privately. So, Bill, thank you very much for joining us. Thank you for all the attendees. We really appreciate your time. And if you wanted to further discuss any of these, we can connect or either introduce you with Bill if you need, you wanted to speak directly with him. So thank you, everyone. Thank you, Bill.